If you're trying to decide if now is a good time to become a real estate investor, you're in the right place. Now, just for context, I've been investing in real estate for more than a decade now. And back in 2011, when I got started in real estate, it was a very different environment than what it is today. And this is where a lot of people are saying it's impossible to invest in real estate now. But what I can tell you is you're seeing more and more unique investment opportunities starting to pop up, and more will be coming. Don't believe me? Let me show you. Here is a 3-bedroom, 1-bath home listed for sale in a nice and growing population suburb of Detroit in Michigan. Is listed for sale for just under $100,000. I'll blur out the address here for privacy, and just for context, I'm recording this in mid-March 2024. The home is not destroyed. Take a look at the pictures. $20,000 to $30,000 worth of work would make this home amazing, and the rental price for this home, according to Zillow, is $1,550 a month. Now, in a nutshell, the reason why people love investing their money in real estate is because you can depreciate an appreciating asset that generates cash flow, and you can also get some tax benefits. And I'm not going to spend an hour going over this in this video, but let me go over what this means briefly. Let's assume that you go out and you buy this property for $200,000. What do you think this property is going to be worth 10 years from now, assuming you bought this property in a good location? Now, I'm not a big fan of speculation, I'm not a big fan of flipping, but just for the purposes of this example, what most people would assume is that this home is going to be worth more in the future than it is today. How much? Well, nobody can predict. Is there a chance it'll be worth less? Sure, but the hope is that 10 years from now, maybe this home will be worth, I don't know, $300,000. Again, I am not in the game of trying to predict this, I'm just showing you this as an example. So what is this? This is appreciation. This price growth is appreciation. So if you sell this home for a profit 10 years in the future, this is money you made just for sitting on this property. But while you see this appreciation, you also get depreciation. Let me show you what that is. As a licensed attorney, who's not your attorney, what I can tell you is that the IRS gives you some special tax breaks as a real estate investor. And one of those tax breaks that real estate investors love is called depreciation. So what you do here is first you separate the value of the property versus the land. So you bought this property for $200,000. Let's assume that the land that this property is sitting on, the land that this home is sitting on, is worth, I don't know, $20,000. So this building itself, the home, the actual property is worth $180,000. Well, what the IRS says is you get to write off a piece of the physical property, a piece of this $180,000 every year for the next 27 and a half years, assuming that this is a single family residential home. So what does that mean in practicality? Well, if you take $180,000, the value of the property, you divide that by 27 and a half, that means that you get to take around a $6,500 tax write-off every single year, which brings me to the third reason why investors love investing their money in real estate. You generate cash flow. So let's assume you bought this property for $200,000. I'm going to get into the numbers a little bit later, but let's assume that every year you make $10,000 of profit. This is the money that's in your bank account after paying for your expenses, your property taxes, insurance, your maintenance, your management fees, your mortgage, and everything else. You pay for all of your expenses, and then you have $10,000 in the bank account at the end of the year. Now, normally, when you make $10,000 of profit, you got to pay taxes on $10,000 worth of income. But remember what we just said, depreciation. This is where now what you get to tell the IRS is, hey, my property is 1 year older. And because of this depreciation schedule that I just showed you, you get to take a write-off of $6,500, a little bit more than that, but $6,500, meaning you tell the IRS, hey, I have $10,000 in my bank account, but I'm only going to report $3,500 worth of income. So you have 10 grand in your bank account that you can spend, but you tell the IRS, I only have $3,500 worth of income because this is considered a paper deduction. It's not a real expense, it's just an expense that you show on paper. And now you tell the IRS you only have $3,500 of taxable income, which means you have a lower tax rate. So now you pay taxes on $3,500, but you have $10,000 in the bank. So now you have this appreciation, the value of your property hopefully going up. Number two is you have depreciation, this tax write-off that you get against number three, your cash flow, you're making money every single month. And then we have the fourth benefit, which are your tax benefits. Now, when it comes to taxes, what you want to understand is you want to make sure you're playing within the rules, because if you're playing outside of the rules, you can end up in jail. So you want to make sure you have a good tax advisor to help guide you through this process, but the IRS tax code gives you a lot of flexibility as a real estate investor. One of those things is, let's assume now that this property actually goes up in value. I don't like playing this game of trying to sell my property for a profit because nobody can predict what's going to happen here. But let's just assume now with this hypothetical, your property grows to $300,000. What you can do now is if you sell this property for $300,000, you have a $100,000 gain, $100,000 profit, which normally, again, you got to pay taxes on. But because it's real estate, you get this special kind of tax break which says, hey, if you take all $300,000 and use all this money to go out and buy more investment real estate, that's going to give you more depreciation, that's going to give you more cash flow. Well, now what you can do is you can defer all of those taxes because of something called the 1031 exchange. This is pretty much every real estate investor's favorite tax code because now what you can do is you can buy this property, make money every single month, get this depreciation deduction. If this property grows in value because you bought it in a good area, because the economy grew, well then you can sell this property for a profit, go out and buy more rental real estate that's going to make you more cash flow, more tax write-offs. And you can do this again and again and again until you die and never have to pay a penny in taxes on these capital gains, on the gains from the profits of you selling a property. You can't really do that anywhere else. If you go out and you buy a stock for $1,000 and it grows to $10,000 and you sell the stock for a profit, and then you take all $10,000 and then you buy another stock, you still have to pay taxes on the $9,000 worth of profit. So you don't have the same opportunity in the stock market, but in the real estate game, you can see this growth in real estate value, and then you can sell the property and take all this money and buy more real estate and not have to pay any money in taxes on those gains. Now, in order for this to actually work, you can't spend this $300,000 on a car. You have to actually go out and buy more real estate, but it allows you to grow your real estate portfolio essentially tax-free because now you can buy this property, see it grow in value, sell it, buy another property, see it grow in value, sell it, and do it again and again and again. You just have to make sure you're actually holding on to the properties for more than a year. You can't be a flipper and doing this. You're not doing this as a real estate fix and flip person. You have to be an actual real estate investor to qualify for this, someone who's buying the property to do this rental game. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.